Is Greenville headed for a housing market crash or a slowdown? Hang with us in this video and we're going to share all the key data points and all the facts that you need to know about the Greenville real estate market. Our real estate team gets this question just about every day. What's going on? Prices are getting slashed. It seems like there's so many more homes available. Are we heading into a crash? 2 out of 3 people right now think that we're heading to a recession and they're worried about what that means for real estate. So we want to share with you what's happening here in the local market so that you're the most equipped and educated buyer in the market or seller. Let's go ahead and start with the fear. In the last year, inventory is up 14%, so there's definitely more houses on the market. We're seeing that 1 out of every 4 or 3, depending on which data source you look at, of sellers are reducing their price in some fashion. Over 40% of the builders out there are doing price reductions or giving some incentives to sell their product. So at first glance, this seems very doom and gloom and sounds very scary and looks like there could be some negative impacts for the housing market, but let's work through all this. If we look at the actual data, the average price for homes is up 3.5% in the market. The median sales price is up 1.6% compared to last year. Sellers are getting 98.5% of their asking price when selling their home, and closed sales are actually up 8.4% year to date. What does all this mean? It does mean we do have more inventory, and we're keeping more inventory because inventory is surpassing demand at this point, but we are still seeing that Greenville has very strong demand. And we're seeing in areas where people traditionally have wanted to be, those homes are still selling very quickly. Sometimes, in some cases, not always, it's much less common than it was back in 21 and 22, but you can see multiple offer situations in some cases. So I've given you some good stuff, I've given you some bad stuff. How do you make sense of all of this? Well, in real estate, what we look at is monthly supply of inventory. Just like if you were to go to the grocery store and all of a sudden there was an egg shortage, what happens to the price of eggs? They shoot up, they get more expensive, so you gotta pay more for those. If we don't have any issues and you can go to the grocery store and eggs are abundantly available, those prices will come back down. That's what happens with real estate. It's supply and demand like anything. So when we look at supply of real estate, we want to see 5 to 6 months of inventory, which creates a balanced market. Anything less than that creates what we call a seller's market, where prices are really shooting up. And if we see more than that, we get a buyer's market where prices are going down, which for a buyer can sound really great, but that normally means a pretty bad economic thing has happened as well. Meaning home prices are more affordable, but typically there's a lot of other things that are not so positive going on. When we break all this down, Greenville is at 4.7 months of inventory, so we're very close to a balanced market now. What we're seeing is this is, in a lot of cases, a tale of two markets. You can see homes that are sitting on the market for a really long time and homes that are selling really fast. So it's really important to have the right advisor to know, is this one of those areas that's still really hot and properties are moving fast, or is this an area where things are cooling off and not moving as quickly? But what this doesn't mean is that we're seeing a decline. We're not seeing that home prices are going down. What we're seeing is that home prices are at a moderate growth level. If we look at real estate over the last 20 years, depending on the source that you look at, you're gonna see somewhere between a 2 to 4% year over year appreciation. And Greenville's right in line with that. And that's kind of the expectation for the US housing market over the next few years, is things will slow down because we were going 95 miles an hour on the interstate, and now we're going to slow it down to the speed limit of 70, 65, whatever it is. So we're getting back to a more normalized pace. And for some people, that feels like a big change because they're so used to hearing all the headlines and how things were going. They were seeing their neighbor put their house on the market and moving out and have all their moving boxes and sharing how they had 10 offers on their house. And they're not hearing that anymore. It's taking longer for that for sale sign to come out of the yard, but it still is selling. As long as things are priced correctly and people have the right representation and the right presentation of their property. And we're still seeing, from a buyer's perspective, there's a lot of deals to be had out there if you know where to look for them. To speak a little bit more specifically about what's driving Greenville, Greenville has been a top relocation market in the Southeast for tons of reasons I talk about on this channel. I won't dive into all of those, but you've got a great relocation market for lifestyle reasons, for personal reasons, for even job opportunities. You've got large companies like BMW and Michelin and some of these other Fortune 500 companies that are dumping in and putting into the economy more money and creating more job opportunities, which is just naturally continuing to grow the area. And Greenville also has created the infrastructure to be able to survive. And of course there's challenges right now, and there always is with growth, but Greenville has done a lot of the things right to make sure that they can continue to grow and expand their population, which means as more people come to the area, you need more houses. With all that said, the fundamentals of everything that makes Greenville great at this point, it doesn't look like it's changing. It looks like people still want to move here. People still want to be here. We have more people coming in than we have going out, which means home prices should be steady or continue to increase over the next coming years. Interest rates always have a big factor on this because ultimately it really impacts affordability. So that will help people decide between buying and renting a home. And that will have an impact on what happens with housing prices. If you found this video helpful, please subscribe to our channel so that way you can get this monthly market update every single month and you can learn more about what's going on in the local Greenville housing market. If you have any questions at all, drop a comment down below or you can find our contact information at the end of this video.